Hey everybody, welcome back to the channel. I hope you're doing fantastically well. So today I want to take a quick look at the main reasons I believe people are failing in prop firm challenges. Now we can actually translate these into trading in general because ultimately the rules will transfer over. Now I spend a lot of time chatting through Telegram groups, through Discord channels, really sort of dealing with traders on a daily basis and really getting a sense of why they're failing and what their big problems are. And ultimately, we're coming to the time of the year where a lot of discounts and marketing will be done through prop firms. There'll be Black Friday sales, Christmas sales, New Year sales. So we can see a lot of people potentially signing up to all these prop firms. And if this gives people the better understanding of why they're not going to fail and waste their money and potentially get funded, I think it's worthwhile sticking around to the end and going through all of these main reasons why people fail prop firm challenges. So the first one is really self-evident, and that is not understanding the rules and also ignoring the rules. And this is what I see most often is people blowing the daily max drawdown and just not knowing how it's actually based, whether it's equity based or balance based. That's where you need to spend the time when you're signing up for challenges. Even if you write down all of the rules or before you start on each day, reaffirm yourself with the rules, put in a line of saying, okay, this is the level I cannot go draw down below, otherwise I will blow my account and fail the challenges. And it's not just drawdowns, it's other things as well, whether it is trading news, are there any restricted assets you can't trade? Are there any lot size restrictions you can put on place? Whether it's around gambling, martingale rules, whether it's can you use copy trading or EA? There's a whole range of things that when you sign up the prop firm, understand what they all are and make sure that your trading takes into account all of those things. So news trading has become quite popular at the moment. A lot of those are generally on the funded accounts, not so much on the challenges. So if I'm trading and I have an open order and I've got a news item coming along and it triggers me in exactly as that news comes along because there's a spike on the price, that could allow me to fail challenges or fail my funded account. Understanding the rules, knowing the rules and not ignoring the rules is the biggest reason why traders will fail. Next one coming on to is lack of risk management. Now, when I talk about risk management, that is how much we're going to place on any particular trade and how much we're willing to risk to get that reward. Now, the rule of thumb is typically you want to be risking no more than 1%, and a lot of people would say only risk a maximum of 0.5% per trade. The lower the risk you have, it may take you longer time to actually get to reach your goals, but ultimately you are safer and have less chance of any spikes or any slippage to take you over any of the actual drawdowns. But what traders will do inevitably is try and push this as far as they can. If they know they've got a 5% max drawdown, they will start risking 2, 3, 4, even 5% on a single trade. Massive risk leverage and huge lot sizes to try and get a huge massive win to try and pass quicker. Ultimately, if you're not managing your risk, you will never be a successful trader and you can never pass these challenges, because even if we get 1 or 2 successful trades with a higher risk, the next thing will happen is we'll end up with 2, 3, 4 losing trades, which will wipe out all of our profits and ultimately take us down to a level where we can never recover from. So yeah, ignoring risk management, over leveraging is definitely a bad way to go. So we come on to number 3, and that is essentially over trading. And this can be a bad trait in everybody. The pressure of trying to pass a challenge, it's not so bad now where it's all unlimited time. If we go back, let's say a year ago, when it was literally you had 30 days to pass, people were over trading massively. They were doing huge number of trades per day and really getting caught up in the whole psychology of trading, and that then led to a downfall. What I've experienced in my own personal trading is the fewer trades you can place, but the better quality, you have a much better outcome of trading. So when people start getting into over trading, they start scalping. They're looking at the 1 minute chart, trying to get a 5 pips maximum on a move. And ultimately, if you're trying to do that as a high pressure, high risk, and you can get very quickly into a situation where you start onto a risk of losers, and then you start going back to the previous rule of ignoring risk management and going bigger and bigger on each trade. And ultimately that will cause traders to have a much more stressful day, and the over trading will really get into people's heads, and ultimately that will cause them to fail. My next one is a lack of a consistent strategy. Now, we know that traders will start onto prop firm challenges often without a lot of knowledge or education. They will be told by one person, this is a trade you must do. It is very simple. Find these 2 particular candles, place the trade and go from there. When it doesn't work, people start to question that and start changing the setup and strategy for their own particular gains. Now, If you haven't got that consistent strategy or that knowledge or understanding of how to trade, it just could be market conditions on that day are not suitable for that strategy. If you then start to deviate away from that one without the experience of having a long-term relationship with the strategy and being able to back test, know where it's performed well, know where it's performing badly, whether it is time of day or particular market conditions, then it could just blow it out of the water. And as soon as you start doubting that strategy, you'll start trying to find another one. Now, often if people are starting out on prop firm challenges, they may not have the year's worth of trading experience like a lot of other people, and they'll just start trying to sign up with any particular signals group. They don't understand the strategy and they start taking signals from anywhere. That again doesn't really work in an ideal situation, because these people often get paid for signals and not paid by results. So anyone can be pushing out buys and sells here, there, everywhere, and not actually be accountable for any of the results. And yes, you might be able to back test and cherry pick good results, but ultimately if the strategy doesn't work and you are not confident in that one and have that lack of that consistency, then you will start failing long-term as a trader. And my final one is emotional trading. We know as traders, psychology and emotions really do get the better of us, and that can actually cause us to get into a downward spiral and start to really make bad decisions. Now, because of challenges, we look to the end, we look to getting funded, and we look to actually start spending that money. Now, reality is it's all about doing one good trade, getting that one, banking it, looking for the next one, and then doing the next trade, and then the next trade. As soon as we start getting very emotional and looking at the end goal and start to really get caught up in the whole challenge and put pressure on ourselves because other people are passing, other people are proving payouts, but we're not, then we can get very emotional about that one and then start to really force the trades, and it doesn't start to work. And that's the whole thing with trading. We are not comparing ourselves to anybody else. This is a personal journey that we are doing. And although some people might be able to claim they can pass challenges and do these in 1 or 2 days, reality is yes, some people can if they get very lucky on a market conditions. But again, you don't know what their risk parameters were. They could have gone very, very high on a particular trade. It just did very well. One trade, passed the challenges, and move on to the next one. Now, on another day, they could have actually blown 5 challenges. We don't know about that one. They're just reporting the good one. We get caught up in the whole emotion of this, and the reality is we want to have a better life for ourselves. We want to have good payments. But if we get caught up in essentially comparing ourselves to other people, emotionally, we will start to detract from the goal, and that is just trading consistently on a daily basis to ultimately get to passing these challenges. But as you can see, pretty much all of these rules are relatable to just everyday trading. If you are trading your own personal money in your own account, or you are funded, or you are doing the challenges, it doesn't make any difference. Trading is trading, and we should treat it the same. It's a discipline, it's effectively a business, it's a job we are doing, and if we apply rules and strategies and the emotional side of things to really contain ourselves from doing anything stupid, then we will be successful and be in this for the long term. So thanks for watching, everybody, and I'll catch you again very soon. Cheers.